Based on the provided data for Bitcoin, a short-term bullish strategy appears promising. The recent price history shows volatility, but a general upward trend. The forecast price also suggests a continued upward movement, albeit with some potential consolidation. Considering the support and resistance levels, conservative entry point could be around $68,500, allowing for a potential upside move towards the resistance level of $69,032. To manage risk, a stop-loss order could be placed slightly below the entry point at $68,200. This would limit potential losses if the price unexpectedly reverses. Target price could be set at $69,000, aiming to capture a portion of the anticipated upward movement. This short-term strategy capitalizes on the positive price momentum and forecasts, while implementing risk management measures to protect against potential downside movements. The provided price history and forecast for Ethereum suggest a potential short-term bearish trend. While the recent price has been relatively stable, the forecast indicates a downward trajectory over the next week. The historical data shows a series of peaks and troughs, with a recent decline towards the end. This, coupled with the forecast predicting further drops, suggests that a short position could be a profitable strategy in the short term. To capitalize on this potential decline, an entry price around $2,500 could be considered, aligning with the current price and the forecasted downward movement. A stop-loss order should be placed at $2,560 to mitigate potential losses if the price unexpectedly rises. The target price could be set at $2,390, which is slightly above the forecasted lowest price, allowing for a reasonable profit margin before the market potentially finds support. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. Although the support price sits at $0.5028, the resistance is at $0.523, indicating that a sustained upward movement is unlikely in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.515 would be suitable, aligning with the current price and the forecasted downward movement. The stop loss should be set at $0.523, slightly above the resistance level, to protect against any unexpected price surges. The target price should be set at $0.495, allowing you to take profits before the price potentially reaches the support level. This strategy aims to capitalize on the short-term bearish sentiment while mitigating potential risks. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. While the historical prices show some upward momentum, the recent 2-week price change indicates a slight downward trend. The forecast further suggests a continued decline in price over the next week. This bearish outlook, coupled with the price being near its resistance level, makes it a less favorable time for a long position. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $168, aligning with the recent price action and slightly above the forecast low, would be suitable. The stop loss should be set at $170 to protect against any unexpected price surges. Target price could be set at $158, aiming to capture a portion of the potential downward movement before reaching the support level. Given the provided data for Cardano, the 2-week price change shows a downward trend, aligning with the 1-week price forecast which predicts further declines. The historical prices suggest a potential support level around $0.2513, while the resistance level sits at $0.3496. Considering this bearish outlook in the short term, a short-term investment strategy focusing on a short position appears most suitable. An aggressive short-term investment strategy could involve entering a short position at $0.342, the current price. The stop loss should be placed at $0.356, the recent high, to limit potential losses. The target price could be set at $0.322, aligning with a significant historical low and reflecting the projected price decline. This strategy aims to capitalize on the anticipated downward movement in Cardano prices within the short term. Based on the provided information for SU coin, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a volatile trend with fluctuations above and below the support and resistance levels. The forecast price indicates a slight downward trend over the next week, suggesting a potential for price decline. Therefore, an aggressive short-term strategy would involve taking a short position at the entry price of $1.97, aligning with the current price and the forecasted downward movement. A stop-loss order should be placed at $2.09 to limit potential losses if the price unexpectedly rises. Target price for this strategy is set at $1.85, aiming to capitalize on the anticipated price decline and secure profits before reaching the support price of $1.6771. This strategy capitalizes on the short-term bearish outlook suggested by the price data and forecast, aiming for a quick profit within a week. The provided Filecoin data suggests a bearish outlook for the short to medium term. The 2-week price change exhibits a downward trend, and the forecast price continues to decline over the next week, reaching as low as $3.19. This aligns with the support price of $3.206, indicating a potential for Filecoin to find a temporary bottom around that level. Considering this trend and the forecast, a short position is recommended for a short to medium term investment strategy. An ideal entry price for this short position would be around $3.42, aligning with the first forecasted price. A stop loss should be set at $3.47, slightly above the current price and the first resistance level, to limit potential losses if the price unexpectedly rallies. The target price could be set at $3.20, aiming to capture the potential price drop towards the support level. This strategy allows you to capitalize on the anticipated decline, while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Theta network, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price near its forecast and the support price. The resistance is relatively high, indicating limited upside potential in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. An aggressive short-term investment strategy would involve an entry price of $1.13, aligning with the resistance level. The stop loss should be set at $1.15 to protect against any unexpected price recovery. The target price should be set at $0.95, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to profit from the anticipated decline in prices, while managing risk through a tight stop loss. Based on the provided historical price data and the 1-week price forecast for Dogwifhat, a bearish short-term investment strategy appears to be more suitable. The historical prices show a downward trend over the past 2 weeks, with the forecast predicting further declines. The current price is hovering near the resistance level of $2.284, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set slightly above the current price to minimize potential losses. The target price would be set at $1.93, aligning with the forecasted lowest price in the next week. This strategy aims to capitalize on the anticipated price decline, while mitigating risk through a well-defined stop loss. Based on the provided price information for Stellar, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, with the price fluctuating around the $0.093 mark. The forecast indicates a slight downward trend, suggesting potential for short-term dips. However, the support price at $0.0906 provides a solid foundation, indicating potential for a rebound. Therefore, a long position is recommended, aiming to capitalize on a potential price recovery. An ideal entry price would be around $0.0915, slightly below the current price and close to the forecast lows. A stop loss should be placed at $0.0906, the support level, to minimize potential losses. The target price can be set at $0.0945, the resistance level, allowing for a moderate profit potential as the price potentially rebounds towards its resistance. This medium short-term approach allows for some time for the market to potentially move in a favorable direction while mitigating risk with a well-defined stop loss. Based on the provided information for Starknet, a cautious investment strategy is recommended. The 2-week price history reveals a consistent downward trend, and the 1-week forecast projects further declines. The lack of support and resistance price points suggests limited immediate upward potential. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.365 would allow for entry near the current price, while minimizing risk. The stop loss should be set at $0.38, slightly above the recent high, to protect against unexpected upward movements. The target price could be set at $0.33, aligning with the forecasted price trajectory, and allowing for potential profit before the price potentially reaches further lows. This strategy focuses on a short-term investment horizon, aiming to capitalize on the expected price decline in the coming week. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a recent decline, with the current price hovering near the support level of $4.013. The forecast suggests a continued downward trend, indicating a bearish outlook in the short term. This suggests that the market sentiment is currently negative, and further price drops are likely. Therefore, a short position on PENDLE appears to be the most suitable strategy to capitalize on the anticipated decline. An aggressive short-term investment strategy would involve entering a short position at $4.62, the current price. The stop loss should be set at $4.76, the recent high, to protect against any unexpected price rebounds. The target price should be set at $4.11, the recent low, allowing you to take profits before the market potentially finds support at the $4.013 level. This strategy aims to profit from the short-term downward momentum of PENDLE while managing risks effectively. Based on the provided price history and forecast for render, a short-term bearish strategy appears most suitable. The historical prices indicate a downward trend, with the forecast further projecting declines over the next week. The price is currently hovering near the upper end of the recent price range, suggesting potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, with a stop loss slightly above the recent high to minimize risk. The target price should be set at a level slightly above the forecasted lowest price, allowing for profit taking before the market potentially finds support. This approach capitalizes on the anticipated downward price movement, while managing risk through a well-defined stop loss. VeChain is showing a downward trend based on the historical price data and the forecast. The price is currently close to its support level, suggesting that a further decline is likely. Considering the bearish outlook, a short position is recommended for this investment strategy. An aggressive short-term investment strategy could involve entering a short position at $0.0212, which is slightly above the current price. The stop loss should be placed at $0.0227 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.01637, which aligns with the support level and represents a potential downside of approximately $23. This strategy aims to capitalize on the anticipated price decline in the short term. Given the price trends and forecast for Binance Coin, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data reveals a recent downward trend, with the forecast indicating further declines over the next week. Price is currently hovering near the resistance level of $563.6, suggesting a potential for a pullback. The support price of $541.3 acts as a crucial level to watch, as a break below this level could signal a more significant decline. Therefore, an aggressive short-term investment strategy for Binance Coin would involve taking a short position at the entry price of $563.0. The stop loss should be placed at $568.0 to limit potential losses if the price unexpectedly surges. The target price is set at $540.0, aiming to capture a potential decline towards the support level. This strategy capitalizes on the bearish momentum indicated by the price history and forecast, aiming to profit from a short-term price correction in Binance Coin. Given the historical price data and the provided forecast for Conflux, a short-term bearish strategy appears most suitable. Price has shown a consistent downward trend over the past 2 weeks, and the forecast predicts further declines. The current price is hovering near the resistance level of $0.1344, indicating a potential for a pullback. Therefore, I recommend a short position on Conflux with an entry price at $0.133, a stop loss at $0.138, and a target price at $0.120. This strategy aims to capitalize on the anticipated price decline while mitigating potential losses with a well-defined stop loss. The target price is set below the support level of $0.156, allowing for a reasonable profit margin. Based on the provided price history and forecast for Worldcoin, a cautious short-term investment strategy is recommended. The historical price data reveals a consistent downward trend, with the recent price hovering near the support level of $1.562. The forecast also predicts further declines in the coming week, reaching as low as $1.59. This suggests a bearish outlook for Worldcoin in the short term. Therefore, an investment strategy involving a short position is advisable. A suitable entry price would be $1.72, aligning with the current price and providing a buffer above the support level. The stop loss should be set at $1.76 to limit potential losses if the price unexpectedly rebounds. The target price can be set at $1.59, aligning with the forecast's lowest prediction, allowing for a reasonable profit margin before the price potentially reaches the support level. Based on the provided Avalanche data, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a clear downward trend, with the forecast suggesting further declines, while the support price at $21.21 provides a potential floor. The resistance at $23.49 suggests limited upward potential. Therefore, a short position is recommended to capitalize on the anticipated price drop. An entry price of $23.00, slightly above the current price, allows for a buffer against immediate market fluctuations. The stop loss should be set at $23.50 to limit potential losses if the price unexpectedly rises. The target price should be $21.50, aiming to capture a portion of the anticipated decline before reaching the support level. This strategy prioritizes risk management while seeking to capitalize on the prevailing bearish sentiment surrounding Avalanche. Based on the provided price information for Jupiter, a short-term bearish strategy appears most suitable. The 2-week price history shows a downward trend, with the forecast projecting further declines. The current price is hovering near the resistance level of $0.8889, suggesting a potential for a pullback. Entering a short position at $0.882, the current price, allows us to capitalize on this anticipated decline. To manage risk, a stop loss should be placed at $0.932, slightly above the current price, to limit potential losses if the price unexpectedly moves upwards. The target price can be set at $0.7897, the support price, aiming to capture the majority of the potential downward movement. This short-term strategy capitalizes on the bearish momentum indicated by both the historical price data and the forecast, while incorporating risk management measures to protect potential losses. Based on the provided EOS price history and forecast, a cautious short-term investment strategy appears most suitable. The price history demonstrates a clear downward trend over the past 2 weeks, with the forecast suggesting further declines. The absence of support and resistance levels further reinforces this bearish outlook. Entering a short position at the current market price, around $0.435, aligns with the anticipated price movement. To manage risk, a stop loss should be set slightly above the entry price, at $0.45. This would limit potential losses if the price unexpectedly reverses direction. The target price for this short position should be set at $0.409, reflecting the lowest point predicted in the forecast. This strategy capitalizes on the prevailing bearish sentiment, while implementing risk management measures to protect against unforeseen market fluctuations. Given the price trends and forecast for TRON, a short-term investment strategy would be most suitable. The historical prices show a slight upward trend, but the forecast indicates a potential pullback in the coming week. The current price is close to the resistance level of $0.1663, suggesting that the upward momentum may be weakening. Therefore, a short position is advisable to capitalize on the potential price decline. An entry price of $0.165 could be considered, aligning with the forecasted price and providing room for profit. The stop loss should be set at $0.167 to protect against unexpected price surges. The target price should be set at $0.162, slightly above the support price of $0.1627, allowing for potential profit before the market hits major support. Based on the provided information about SE, a bearish investment strategy appears to be most suitable. The 2-week price change shows a clear downward trend, with the forecast indicating further declines in the coming week. The historical prices suggest a consistent downward movement, currently hovering near the support price of $0.3066. This, coupled with the forecast pointing towards a potential drop to $0.314, indicates a high likelihood of continued price depreciation. Therefore, an aggressive short-term investment strategy would involve taking a short position on SE. A suitable entry price would be $0.367, aligning with the recent price action and providing a margin of safety above the immediate support level. The stop loss should be set at $0.386 to limit potential losses in case of an unexpected price surge. The target price could be set at $0.30666, aiming to capitalize on the anticipated decline towards the support level. This strategy capitalizes on the bearish sentiment and potential for further price depreciation in SE. Given the current price trend and forecast for Shiba Inu, a cautious investment strategy is recommended. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates a continuation of this downward movement in the coming week. The support price is at $0.000169, indicating a potential floor for the price. However, the resistance price is at $0.000184, suggesting limited upward potential in the near term. Considering these factors, a short position on Shiba Inu appears to be the most suitable strategy for a short-term investment perspective. An entry price of $0.000176 aligns with the current price and the forecast. A stop loss at $0.000179 would protect against unexpected upward movements, while a target price of $0.000169 allows for potential profit, taking as the price approaches the support level. This strategy aims to capitalize on the anticipated decline in price while minimizing potential losses. Based on the provided Dogecoin price history and forecast, a short-term investment strategy appears to be the most suitable. The historical data shows a fluctuating trend with recent upward movement. The forecast indicates a continuation of this upward trend, albeit with slight fluctuations. This suggests a potential opportunity to capitalize on the short-term price appreciation. Therefore, a long position is recommended. The entry price should be set around $0.158, slightly below the current price, allowing for a potential entry point after a minor price dip. The stop loss should be placed at $0.151 to minimize potential losses if the price unexpectedly reverses. The target price could be set at $0.168, aiming to capture a significant portion of the forecasted upward movement. This strategy allows for potential profit within a relatively short time frame, while managing risk through a defined stop loss. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a clear downward trend, with the forecast indicating further declines. The forecast suggests Hooked Protocol could drop from its current price to as low as $0.303, suggesting a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. A suitable entry price for a short position would be $0.38, aligning with the recent price action. The stop loss should be set at $0.404 to protect against any unexpected price recovery. The target price should be set at $0.30, allowing you to take profits before the market hits major support levels. This strategy aims to capitalize on the anticipated decline in prices, while managing risk through a well-defined stop loss. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and below the historical highs. The forecast suggests Aevo could drop further in the coming week. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For a cautious short-term investment strategy, an entry price of $0.305 could be considered, slightly above the forecasted lowest price. The stop loss should be set at $0.319 to protect against any unexpected price recovery. The target price should be set at $0.28, allowing you to take profits before the market hits potential support levels. This strategy aims to minimize risk while capitalizing on the anticipated downward price movement. Based on the provided historical price data and forecast for Litecoin, a short-term bearish investment strategy appears to be most suitable. The price history demonstrates a consistent downward trend, with the forecast projecting further declines. This suggests a lack of strong upward momentum and a potential for continued selling pressure. Considering these factors, a short position on Litecoin is recommended. An entry price of $0.00634, aligning with the current price, would be appropriate. A stop loss should be placed at $0.00651, slightly above the current price, to limit potential losses. The target price should be set at $0.005644, the support price, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook for Litecoin, aiming to profit from the potential price drop towards the support level. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend with recent declines, and the forecast indicates further downward movement. The support price sits at $0.01647, suggesting this level could act as a potential buying opportunity. However, the resistance at $0.01903 indicates significant hurdles for upward price movement. Considering the bearish outlook in the short term, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $0.0185, aligning with the current price and the recent downward trend. The stop loss should be set at $0.01903, above the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.0165, slightly above the support price, allowing you to take profits before the market potentially bounces off the support level. This strategy aims to capitalize on the short-term bearish momentum, while managing risk effectively. Given the provided price information for PEEP, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a general downward trend, with the forecast predicting further declines, while the support price sits at $0.0000790, the resistance level at $0.0000842 suggests limited upward potential. Considering this bearish outlook, entering a short position could be advantageous. To execute this strategy, a conservative approach would involve setting an entry price at $0.0000810, slightly above the current price and below the resistance. the stop loss should be placed at $0.0000830 to minimize potential losses if the price unexpectedly surges. The target price would be set at $0.0000780, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management while seeking to capitalize on the potential for a short-term price drop in PEP. Price history and forecast for TON coin indicate a bearish trend. The historical prices show a consistent downward movement, with the forecast suggesting further declines in the coming week. This suggests that TON coin is likely to continue its downward trajectory, making a short position the most suitable strategy. Given the forecast, an entry price of $4.85 aligns with the current price and the anticipated price drop. To manage risk, a stop-loss order should be placed at $4.93, slightly above the entry price. To protect against any unexpected upward movement, the target price should be set at $4.69, slightly above the lowest forecasted price, allowing for a profit margin while minimizing the risk of chasing the market down. This strategy capitalizes on the bearish sentiment surrounding TON coin and aims to generate profits from the anticipated price decline. Based on the provided data for Bitcoin Cash, a cautious approach with a short-term investment perspective is recommended. The 2-week price history demonstrates a volatile trend with a slight downward bias, while the current price is hovering near the support level. The forecast suggests a continued decline in the coming week. This bearish outlook, coupled with the relatively low resistance level, indicates a higher probability of a price drop. Therefore, a short position on Bitcoin Cash is advisable. An entry price of $345, slightly below the current price, allows for immediate profit potential. A stop loss should be placed at $353, protecting against any unexpected upward movement. Target price can be set at $320, aligning with the support level and maximizing potential gains from the anticipated decline. This strategy allows for a quick entry and exit, minimizing exposure to market fluctuations and capitalizing on the short-term bearish trend. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a slight downward trend, with the current price hovering near the support level of $9.57. The forecast suggests a continued downward movement, potentially reaching as low as $9.81 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at the current price of $10. The stop loss should be set at $10.58, above the current price and the resistance level. To protect against any unexpected upward price movement, the target price should be set at $9.60, slightly below the support price, allowing you to take profits before the market hits major support and potentially rebounds. This strategy aims to capitalize on the short-term downward momentum while managing risk through a well-defined stop loss. Polkadot shows a downward trend in its 2-week price change, and the forecast suggests further declines. Price is currently near the resistance level of $3.965, indicating potential for a pullback. Given this bearish outlook, a short position on Polkadot seems most suitable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at the current price of around $3.91. The stop loss should be set at $4.04, slightly above the recent high. To protect against unexpected upward movement, the target price could be set at $3.67, aligning with the support price and allowing for potential profit before the price reaches significant support. This strategy aims to take advantage of the short-term bearish momentum in Polkadot. Given the price trends and forecast for Near protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Near protocol could drop from its current price to as low as $3.4, while the support price sits at $3.241 and resistance at $4.32. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $4.0 would be ideal, aligning with the forecasted price. The stop loss should be set at $4.15 to protect against any unexpected price recovery. The target price should be set at $3.4, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $3.241. Given the price trends and forecast for stacks, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a consistent downward trend, with the forecast suggesting further declines. Price is currently close to its support level of $1.42, indicating a potential for further downward movement. Therefore, an investment strategy for stacks should involve a short position. A suitable entry price would be around $1.57, aligning with the forecast price. The stop loss should be set at $1.64 to limit potential losses. If the price unexpectedly rebounds, the target price could be set at $1.42, aiming to capture the potential decline towards the support level. This strategy capitalizes on the bearish outlook and aims to profit from the anticipated price drop in the short term. The provided price data for Aptos reveals a downtrend over the past 2 weeks, with the forecast indicating further declines. Considering this bearish outlook, a short-term investment strategy focusing on a short position appears to be the most suitable approach. An entry price of $8.94, aligning with the current price and the forecasted price for the next week, would be ideal for this strategy. Setting a stop loss at $9.22, slightly above the current price and the recent support level, would help protect against potential upward reversals. A target price of $8.19, aligning with the forecasted lowest price within the next week, would allow for capturing potential profits from the anticipated decline. This strategy aims to capitalize on the short-term bearish momentum of Aptos, while managing risk through a well-defined stop loss. Find stop loss, find stop loss, find stop loss, find. Given the price trends and forecast for Litecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price near its support level of $64.32. The forecast suggests further declines, with Litecoin potentially dropping to $64 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $66 would be ideal, aligning with the forecasted price. The stop loss should be set at $67.02 to protect against any unexpected price recovery. The target price should be set at $64, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $64.32. This strategy aims to capitalize on the short-term downward momentum of Litecoin, while managing risk through a defined stop loss. Based on the provided information for Uniswap, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with no clear dominant direction. The forecast suggests a downward trajectory over the coming week, aligning with the recent price dip. This bearish outlook, coupled with the proximity of the current price to the support level of $6.636, indicates a potential for further decline. Therefore, a short position is recommended to capitalize on this anticipated price drop. An entry price of $7.00 would allow for a modest profit margin, while minimizing risk. A stop-loss order should be placed at $7.30 to protect against any unexpected upward movement. The target price could be set at $6.70, aiming to capture a portion of the predicted decline before the price potentially finds support at the identified level. This strategy prioritizes risk management and seeks to profit from a short-term bearish trend in Uniswap. Given the historical price data and the Bittensor forecast, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a clear downward trend, with the forecast predicting further declines over the coming week. The forecast suggests a price drop from the current level to approximately $405, while the support price sits at $337.6, indicating a potential for further downside movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set at $440, slightly above the current price to minimize risk. The target price should be set at $400, aligning with the forecasted price decline and allowing for potential profit before reaching the support level. This strategy capitalizes on the anticipated price decrease and aims to generate short-term gains within a volatile market environment. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a fluctuating trend, with the current price hovering near the support level of $4.721. The forecast indicates a downward movement, suggesting a potential decline in the price of Internet Computer. Considering this, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $7.53, aligned with a recent price dip, would be suitable. The stop loss should be set at $7.86, slightly above the recent high to minimize potential losses from an unexpected price reversal. The target price should be set at $7.18, reflecting the forecasted price decline. This strategy allows for potential profits while mitigating risks associated with the uncertain short-term price movement of Internet Computer. Based on the provided Artificial Superintelligence Alliance price information, a short-term investment strategy appears most suitable. The 2-week price change reveals a downward trend, and the 1-week forecast predicts further declines. The historical prices show a consistent downward movement, suggesting a bearish sentiment in the market. Considering the support price of $0.816 and the resistance price of $1.235, the current price range indicates a potential for further price drops. Therefore, an aggressive short-term investment strategy would involve taking a short position on Artificial Superintelligence Alliance. A suitable entry price would be around $1.20, aligning with the current price and the forecast. The stop loss should be set at $1.25 to protect against unexpected price rallies. The target price could be set at $1.10, aiming to capitalize on the anticipated price decline. This strategy aims to profit from the short-term downward momentum of Artificial Superintelligence Alliance by leveraging the bearish market sentiment and the price forecast. The provided price information for Optimism suggests a bearish trend in the short to medium term. The 2-week price change shows a consistent downward movement, and the forecast predicts further declines. The current price is hovering near the support level of $1.25, indicating a potential for a bounce, but the forecast suggests this bounce might be short-lived. Given this outlook, a short position appears to be the most suitable strategy. To execute this strategy, an entry price of $1.48 would be appropriate, aligning with the forecast and allowing for some room for a potential bounce before entering the short position. A stop loss should be placed at $1.54, the resistance level, to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $1.25, the support level, aiming to capitalize on the predicted price decline. This strategy prioritizes capital preservation while aiming to profit from the anticipated downward movement in Optimism. Given the current price trend and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The support price is at $14.8, suggesting a potential floor for the price. However, the resistance price at $19.3 indicates that the upward momentum is weak. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For this short-term strategy, an entry price of $18.5 would allow you to enter the market near the current price level. The stop loss should be set at $19.0 to protect against any unexpected price surge. The target price should be set at $17.0, aligning with the forecasted price and allowing you to take profits before the price potentially reaches the support level. This strategy aims to capitalize on the short-term bearish outlook for Ethereum Classic while managing risk effectively. Given the historical price data and the 1-week weak price forecast for Ethereum name service. A short-term bearish strategy appears to be the most suitable. The historical prices show a downward trend, with the forecast suggesting further declines. While the support price is at $14.55, the forecast predicts prices could drop to as low as $13. Considering this, a short position would allow you to capitalize on the anticipated price decrease. An ideal entry point for this strategy would be around $15.80, aligning with the resistance price and allowing for some room for price fluctuation before entering the short position. The stop loss should be set at $16 to protect against any unexpected upward movement. The target price should be set at $14, slightly above the forecasted lowest price, allowing you to take profits before the market potentially hits major support. This short-term approach capitalizes on the anticipated price decline while mitigating risk through a well-defined stop loss. Given the provided information about Solana name service, a cautious investment strategy is recommended due to the downward price trend and the forecast predicting further declines. The historical price data shows a consistent downward movement, with the price currently hovering near the support level of $0.1798. The forecast suggests that Solana name service could drop to as low as $0.177 in the coming week. This bearish outlook indicates that a short position might be more suitable for capitalizing on the anticipated price decrease. An aggressive short-term investment strategy could involve entering a short position at $0.205, which is slightly above the current price and aligns with the forecast. The stop loss should be set at $0.215 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.185, aiming to capture a significant portion of the predicted price decline. This strategy allows for potential profits while mitigating risks associated with the volatile nature of cryptocurrencies. Given the current price trend of Aave and its forecast, an investment strategy focusing on a short-term approach appears most suitable. The historical price data reveals a downward trend, with the forecast indicating further declines, while the support price at $118.78 suggests a potential floor for the price. The resistance level at $137.42 indicates a significant barrier for upward movement. Therefore, a short position on Aave is recommended to capitalize on the anticipated price decline. An entry price of $140 would align with the current price and the forecasted price trend. A stop loss at $145 would protect against unexpected price surges, while a target price of $125 would allow for substantial profit taking before reaching the support level. This strategy leverages the short-term bearish outlook for Aave, aiming to generate returns from the expected price decrease. Based on the provided price history and forecast for Injective, a cautious short-term investment strategy appears most suitable. The historical price data demonstrates a downward trend, with the forecast predicting further declines, while the support price sits at $14.93. The resistance at $17.32 indicates limited potential for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $17.00 aligns with the current price and the forecast, allowing you to enter the trade as the price approaches its resistance level. The stop loss should be set at $17.50 to mitigate potential losses if the price unexpectedly surges. The target price can be set at $15.00, taking advantage of the forecast prediction of a price drop towards the support level. This strategy prioritizes risk management and aims to profit from the short-term downward price movement of Injective. Given the historical price data for Polygon and the provided forecast, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change reveals a downward trend, and the forecast suggests further declines in the coming week. The current price is hovering near the upper end of the recent price range, suggesting a potential for a pullback. Therefore, I recommend a short position on Polygon with an entry price around $0.32, a stop loss at $0.33, and a target price at $0.29. This strategy capitalizes on the anticipated price decline while limiting potential losses. The stop-loss placement above the entry price ensures that the position is closed automatically if the price moves against the predicted direction. The target price is set below the forecast's lowest point, allowing for potential profit taking before reaching the anticipated support level.